Alright, hi guys, welcome back to PKFX YouTube trading channel. So this video will be an update on the GBPCAD trade that we have taken, and as you can see, this has been a fantastic trade. This is, I would say, near to excellent, right? So we have already TP'd in this particular trade, but I would like to break down again in why I decided to enter this trade, what was going on throughout this movement within this trade, and what was the reason in why I did not proceed to continue to hold this trade. As you can see, the market literally dumped all the way down here, and in fact on the daily candlestick I was expecting the market to come all the way down here. So why did I close out the trade over here, up here, when I could have secured more profits if I chose to continue to hold all the way down here? So this is a very important thing, because if we lose, we need to analyze the market, and if we win as well, we need to understand why we won, what we could have done differently, is there room for any improvement. These are the things that is very important for us to journal. All right, so now going back to the 30 minutes candlestick, if I were to zoom in the 30 minutes candlestick, you can see this was the point of entry, and I mentioned previously that let me just zoom in over here a bit closer. Okay, so this particular candle was my personal decision candle, where this downwards shift of structure changed into a buy, but was invalidated by this strong engulfing candle towards the sell direction. So for me, this doji candle over here indicates that the highest point has been achieved and the market decided to reverse into sell and made a new lower low. This was the lower high, and when the market break above this point, at that point of time, it made a new higher high, and this turned into a higher low. However, I did not take this as a confirmation candle, even though it has closed, because the following candle itself engulfed this candle and engulfed this candle as well. So this is a very strong engulfing candle, and despite the fact that it did not break over here, this engulfing candle showed me a very strong push downwards. That means a huge sell order was executed over here by the big players, right, by the market movers. So the right thing to do was to wait for a confirmation closure over here, this candle over here, that says, hey, now we are indeed a sell. This is my lower low and this is my lower high. However, I decided, based on this candle itself, that it is going to be moving downwards. I decided to take the risk, and I set my sell limit over here, and it got triggered over here in this candle. So this was my entry point, and as per my bigger time frame analysis, the daily was actually an uptrend. So this was the higher high, this was the higher low. So when I saw this candle over here reversing, and this was a very strong resistance area, and I have the round psychological number of 1.87 thousand over here acting as a resistance as well, I said, hey, this can be a potential pullback area where the market needs to pull back all the way to come back and retest this previous structure point areas. This looks like pretty solid structure points. So the market should ideally come all the way down here to retest. Heck, it can even go and wick all the way down here, right, before continuing the rally upwards. The daily EMA was also coming up here. So this could have been, you can see it now, this area over here could have been a significant support before the next push upwards. So this was my analysis, and this was the reason in why I drew the blue color arrow over here. As you can see, I said the market is going to come here, it's going to buffer and push downwards. I drew this before the market did any of this. So what made me to enter was the 30 minutes candlestick shift of structure, right? Even though the 4 hour was bullish, right? The 4 hour back then was bullish. The daily candle was bullish, but I see the 4 hour momentum was going upwards, clearly creating this white line over here that I drew. If I reverse this scale over here, if I invert the scale over here, you would remember this pattern, right? This is like a triangle pattern that whenever it breaks out, it literally takes off, it literally flies, at least to this point over here. So I saw this being broken out. So that's why I entered the trade over here. This confirmed to me, this particular doji candle as well, that hey, it's gonna fly up. So let me invert back the scale. And that's what I saw. That for me it was easier when I invert the scale to see what was happening, because I could draw the line, I could see better. So if you're like me, if you could not see the pattern in the original direction, just right click and just invert the scale. So if you're someone who is more more prone to buy, when you invert the scale, a sell is technically a buy, right? So let me just invert back again. Boom. All right, so that's what we did. And the most beautiful part is, as per my personal confluences calculations, this only had like 60% confluence percentage, which means that it's not like an A plus setup. It's not such of a trade that I would want to risk a big amount. Therefore, I only risked 0.5%. But the beauty over here, if you can see, upon entry, the market never ever ranged around this area or even go anywhere close to the stop loss area. It literally perfectly went all the way down, right? There was a momentary moment where it shifted the 30 minutes candle to be a buy, but the next following up candles eventually turned it back to a sell. So the market went all the way to TP without any form of hesitation. And when I actually checked back my chart, it was actually doing this over here. Now, at that point of time, I personally set the trade to be a 1 to 2.4 risk to reward, and the market has already given me a 1 to 2.4 risk to reward, right? So for me, I've already achieved the target that I set for it. Now, can I continue to hold this trade down further? Yes, but I did not do that because for me, the 2-hour EMA was coming up. So I had to pass through this this support area to break it and form it as a resistance, right? And you can see the market actually came down here and it bounced back pretty strong over here, this green candle that you can see over here. This could have been a reversal point, and I could have been, screwed over here for this trade, and it could have easily gone back to my break even or hit the stop loss as well. But the market chose to, continue the trend downwards. The downward momentum literally was fire down here. And when it came down here, can you see like this huge wick over here in the 2-hour candlestick? This also was giving me an indication that, hey, maybe the market would reverse, right? So at this point of time, I reanalyzed and I said, okay, my emotions right now is between fear of missing out the potential opportunity, fear of losing the capital of being greed. So what do I do? So as per the plan, I wanted to make a 1 to 2.4. I should stick to the plan. Hence, I took my profits right over here. Now, as you can see what happened thereafter, right? The market literally rallied all the way down. Right now it's still ongoing. And this would have been a 1 to 4.2. 1 to 4.2. That would have been an excellent trade, right? I mean, this trade itself is already excellent. This is beyond excellent. So that's why sometimes people say, let your winners run. You wanna cut your losers short. You wanna let your winners run. But it is not as easy as what they say to let your winners run, because let's be honest, at this point of time, this is also another support and resistance area, the zone of interest over here that I've marked down. If I go to the daily candle, right over here, this used to be a strong support and resistance area. You can see so many structure points. The market came here, bounced. The market came here and bounced and literally flew up, right? The market tested from below, and then got rejected down again. Tested from below, got rejected down again. So this area used to act as a very strong support and resistance zone or area of interest. Therefore, I was expecting some sort of a reversal over here or some sort of a reaction over here, right? And I personally didn't want to continue to hold the trade, because if there was a bounce and the market is going to continue to reverse, it could deplete whatever profits that I've made, and it would make me want to hold the trade for another day and another day and another day. And the swap in GBPCAD is pretty high. So every other day that I'm holding, I'm paying so much of fees for the swap itself. So why be greedy, right? If you're already aiming for 1 to 2.4, all right, if the market has given you a beautiful 1 to 2.4, take it, secure the capital. That was another thing that I could have done, right? So what I could have done is I could have moved my stop loss, right, all the way down here and say, let the market run, and if it comes back and hit the stop loss, I take it as 1.2.4, right? But if the market continue to run, I can continue to move my stop loss, like trailing stop loss, and secure as much as I can. True, that is something you can do as well, but I realized that if I did that at this point of time, the market would have hit my stop loss a few times before the market actually rallied downwards, right? So the stop loss would have been triggered. Maybe I wouldn't have hit 2.41, maybe I would have lost more than that, plus the swaps, plus the fees. Maybe it's just 1 to 2. So for me, whatever it is, taking a profit at your pre-planned TP area is never a loss, it's always a win. So this was an excellent trade in my eyes. Never would I have ever imagined that the market would literally just pass through this area like this. It literally invalidated the area of interest, and then it came back down, retest to confirm, and now it's pushing downwards. And I believe it's going to continue its momentum, right, to go all the way down here. Like if I look at the daily candlestick, all the way down here, and that move, to be fair, it's almost 1 to 7.8. Can it happen? Probably. Will it, is it worth it to hold continuously up to that extent? As per my trading strategy, not really. I rather secure the profits and control my emotions, learn to control my emotions, and let the market do its thing. So we got to journal this, right? So I've already updated my journal as well. And as you can see, GBPCAD, this was the time I took and this was the time I closed. So it was almost 23 hours, 30 minutes, almost about a day. It was a win. I updated my entry price. As you can see, the confluence was only 60%. So I chose to risk only 0.5%. So this is a new column that I've added, which I'll explain briefly in my Building a Trading Journal Part 3 session that I'm going to be doing pretty soon. So I've updated the entry price, the stop loss, the take profit, the exit price. When did I actually exit this trade, right? The lot size that I took, and I only risked 0.5%, and I got a reasonable reward, minus out the fees, the swap and everything. The R multiple was actually 2.25, 1 to 2.25, minus out everything. So that was a pretty good trade, right? And the emotion was calm, as I was only risking 0.5%. The trade reason, this I've gone through previously. This is a high risk pro trend trade on the weekly. Position taken based on the market, where the market at, and decided to proceed. And as observed, clean 30-minute shift of structure and engulfing candle, like I explained previously. What can go wrong? When looking at the daily and 4-hour buy, this trade to be considered as high risk counter trend trade with only 60% confluence. The 1-hour and 2-hour EMA has to be broken or will act as support and reverse the market to hit SL. So all this was broken. I was expecting the 4-hour EMA to hold, but that was also broken. So the results, the trade rallied beautifully to TP, decided to close out, right? The trade as nearing next support area with 4-hour EMA. So that was this area. If I go to the 4-hour candlestick, and let me just zoom in, boom. So it was coming about here, and I saw that the market was bouncing at the point when I closed it. It was coming back to my TP area after touching this EMA. So I thought, hey, you know what? This 4-hour EMA is going to act as a support finally, right? Because you look at the 4-hour candle, it has only been going down, 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 and down without any sort of bounce back, right? So I thought of a market correction that I was expecting to happen over here. Hence, that's why I closed it, and the reason to close it is a very good reason. Therefore, I take it as a good trade, right? I followed my plan. Now, decided to close out the trade as nearing the next support area with 4-hour EMA coming up as well, expecting potential bounce in this area, so better to close out and secure the profits. Also, the sell swap, right, the overnight swap, right, was high, hence no point to continue to hold. The next few hours followed and market continued to dump down, giving almost 1 to 4.2 risk to reward. So this is what I showed in the charts just now. And if I decided to let the profits run, I would have been risking the profits that I already secured, right? I'm sorry for this. Yeah. So decided to control the greed and accept what the market has given, move on to the next trade. So this is the most difficult part that most of the traders will tend to face. that I'm also going through as well. It was not easy for me as well. So to control the greed, to say that what if I hold? What if I hold? Well, if you hold, and what if the market reversed on you back again and you lose the entire profits that you made for the past one day? Is it worth it? So these are the things that, it's going to be consistently challenging throughout our life as traders. This is where we need to be able to control our emotions, and we say that, hey, this was the plan, this was the risk, and this was the reward, and I've achieved more than 1 to 2 risk to reward. It was a good trade. I'll close this, I'll take the capital, secure it, move on to the next trade. That's about it. Whatever that happens thereafter, it doesn't matter. Market will always move up and down. It doesn't matter. There will always be another trade. And that's about it, guys. So that was it. That was GBPCAD. That was trade number 15. It was a fantastic trade, and I've closed it off already. And now that I've concluded 15 trades, I believe it's time to update the trading journal on how to build your trading journal part 3, where I've updated some of the rows and columns. So I'll explain that in a separate video. Make sure to watch that so that you have a better understanding on how all this thing is playing out. I hope that you will be with us throughout. When I reach my 100 trade, everything will start making sense at that point of time. And I believe at that point of time, we would be able to already see the profitable edge that we are building from scratch. So if you have your friends who want to learn how to trade and they want to learn for free because they do not have any money to invest in mentorship and so on and so forth, they want to know how to build everything from scratch, this is the best channel for them to subscribe. So pass it on to them. Ask them to watch how to build your trading journal from part 1, part 2, and I'll make a part 3. And keep following the trades. Eventually, you'll start seeing how I see the market. And I'm not perfect as well. I make mistakes. And the beautiful part over here is any mistake that I do, I literally record the numbers up to the T, and I update the journal, the notes in the journal accordingly. So this is my best form of proof that anybody could probably build a trading edge from scratch if they actually give their all out into it. So that's about it, guys. That's a trade update. GBPCAD, it's a win. So I'll be celebrating this win. It was a good win. And thank you so much for watching. Have a good day, guys.